What if the biggest AI revenue story today isn't Nvidia, not Microsoft, and not Google? What if it's Meta? Meta's AI-powered advertising platform is quietly generating a $60 billion annual run rate, making it one of the largest AI monetization engines in the world, potentially second only to Nvidia. And yet, most investors still think of Meta as just an ad company. Today, I want to explain why that view is outdated and why Meta may be one of the most misunderstood AI plays in the market. I'm Edward Kalstian, founder of Egg Capital, where we empower your investing journey. This video isn't about hype. It's about where real AI revenue is already happening. When people talk about AI monetization, they usually point to cloud services or AI models. But Meta is monetizing AI in a far more immediate way through advertising. Meta's Advantage Plus platform uses AI to automatically optimize ad targeting, creative selection, and budget allocation across Facebook and Instagram. The result? Advertisers see meaningfully higher returns and Meta captures more ad spend. Today, Advantage Plus is operating at an estimated $60 billion annual revenue run rate. To put that into perspective, that's larger than OpenAI's current revenue, potentially larger than Microsoft's reported AI revenue, and growing inside Meta's existing ecosystem. This is not experimental AI, this is AI that already prints cash. Most investors associate AI with chips, data centers, and cloud infrastructure. But AI's real power lies in monetization efficiency. Meta's AI doesn't just generate text or images, it directly improves conversion rates for ads, advertiser return on investment, and user engagement. In some cases, advertisers report earning more than $4 for every $1 spent using Advantage Plus. That matters because when return on investment improves, ad budgets expand. This creates a feedback loop. Better AI is better results, more ad spend, and higher margins. That's why Meta's AI business scales so efficiently. Here's where things get interesting. If we compare estimated AI-driven revenue across big tech, Nvidia leads through AI hardware, Meta may already rank second, driven by AI-powered advertising. Microsoft follows through Azure and OpenAI exposure. And yet, Meta rarely gets mentioned in AI revenue rankings. Why? Because investors still mentally classify Meta as old tech advertising, when in reality, it's operating one of the world's most advanced AI monetization systems at massive scale. Now, this doesn't come without risk. Meta is spending aggressively on AI infrastructure, pushing capital expenditures toward $100 billion for 2026. In the short term, this pressures free cash flow. That's the trade-off. Heavy upfront investment in exchange for long-term AI dominance. If AI engagement or monetization stalls, these investments would look excessive. But if Meta continues improving AI efficiency, recommendation systems, and ad performance, this CapEx becomes a long-term moat, not a liability. Meta's real advantage isn't the AI models themselves, but the fact that it operates at a scale very few companies can match. Meta has billions of daily users across Facebook, Instagram, Reels, WhatsApp, and Threads, and massive volumes of proprietary, real-time behavioral data, and continuous feedback loops that instantly measure what works and what doesn't. And finally, direct built-in monetization through advertising and commerce. Here's why that matters. AI improves content recommendations, better recommendations increase engagement, higher engagement increases ad inventory, and AI optimizes that inventory in real time. This full stack integration is extremely difficult to replicate. Meta isn't selling AI access, it's embedding AI into the behavior of billions of people every single day. So what's the takeaway? Meta may already be one of the largest AI revenue generators in the world, yet it's still valued primarily as an advertising company. If AI monetization continues to scale the way it has so far, investors may eventually realize that Meta isn't late to AI, it's already winning, quietly. So let me ask you, do you think Meta's AI advantage is sustainable, or is the market right to stay skeptical? Let me know in the comments, and if you found this breakdown helpful, like this video and subscribe to Egg Capital. Thanks for watching, and I'll see you in the next one.